Welcome to the European Parliamentary Research Service podcasts.
Today we'll be talking about the Public Sector Loan Facility, one of the pillars of the EU's Just Transition mechanism to help the regions most affected by the transition to a climate-neutral economy. Want to know what it is and how it will work? Stay tuned.
The European Green Deal seeks to turn Europe into a climate-neutral continent by 2050 through a new growth policy driven by green investments.
This strategy clearly makes good sense, but the transition could have a negative impact on jobs and the local economy in those regions that are heavily dependent on fossil fuels or carbon-intensive industries. So, to help these regions and territories undergo the necessary changes, the European Union has set up a Just Transition mechanism. But what is this mechanism exactly?
Well, it comprises of three pillars: the Just Transition Fund, a dedicated transition scheme under the InvestEU programme, and a public sector loan facility, which is the subject of this podcast. So, how will this facility work in practice?
Essentially, the loan facility will support public investments by offering preferential lending conditions to those territories most affected by the climate transition. It will include €1.5 billion in grants from the EU budget and up to €10 billion in loans from the European Investment Bank's own sources.
It aims to mobilise between 25 and €30 billion in public investment over the next 7 years.
It certainly sounds like an attractive package, but who will have access to this money? Stay with us.
In principle, funding will be available to all member states, while obviously focusing on those territories and regions facing the biggest transition challenges.
These territories will be listed in the plans under the Just Transition Fund, which are currently being prepared by member states. Now, it's worth noticing that while support under the Just Transition Fund is restricted to investments that can help alleviate the economic cost of the climate transition for the territories in question, the other two pillars of the mechanism, the Just Transition Scheme and the Public Sector Loan Facility, may be used to support investments across a wider geographical area and a broader range of sectors.
Provided, of course, that they also benefit the Just Transition territories themselves. Investments eligible for support under the Public Sector Loan Facility include greener energy and transport infrastructure, district heating networks, smart waste management, land restoration, training or social housing, for example.
Indeed, as long as they meet certain criteria. They must be able to achieve measurable impact, have received a loan from the European Investment Bank under the facility, and generate insufficient revenue to qualify for market rate loans.
In principle, the grant may not exceed 15% of the total amount of the loan provided by the finance partner under the Public Sector Loan Facility. But this figure may be increased to 20% in the case of the EU's poorest regions.
So when will this facility be available? Keep listening.
Well, at the moment, the proposal is in the hands of the European Parliament and the Council, which brings together the EU member states. And as you can well imagine, they both have quite a lot to say.
The Council wanted to make one point clear. The facility should not support activities excluded from the scope of the Just Transition Fund. What's more, projects receiving support under the facility should also be allowed to receive advisory and technical support from other EU programmes.
For the Parliament, it's important to ensure that the facility's projects and beneficiaries comply with the EU's fundamental values, the Paris Agreement and the Union's climate neutrality and biodiversity objectives.
As for the numbers, the Parliament called for the grant component to be increased from €1.5 billion to €1.76 billion, adding also that this amount should come entirely from the EU budget. It also wants beneficiaries with lower administrative capacities to be able to benefit from extra technical and administrative support.
The Parliament also defined the eligibility conditions for finance partners other than the European Investment Bank, underlying that these conditions should reflect the objectives of the facility.
And it wants to make access to the facility conditional upon the adoption of a national objective towards climate neutrality by 2050. For those member states that have not yet committed to a national target, it proposes that only 50% of their national allocation should be released.
So, the stage has been set for a truly fascinating debate.
This is a European Parliamentary Research Service podcast.
Thanks for listening.